Hello again, everyone. Welcome to another AUBER strategy video. This week, we are looking towards some exciting trading opportunities. And I just want to take the time to actually go through the analysis for the week that I'm looking forward to, and also to discuss any potential concerns that may come up. So before we begin, as usual, let me just start with a word of prayer. God, thank you for your blessings. Thank you for your goodness. Thank you for your mercy and this opportunity to trade. I ask that you will just be with anyone watching this video. Help us all to be successful, and may we continue to learn and grow together. We thank you and we pray in Jesus' name. Amen. All right. Excuse me. So last week, um, I started out the video reminding us all, or reminding everyone, that NASDAQ 100 is a bullish instrument. And of course, what that means is that it continuously makes higher lows, higher highs, higher lows, higher highs. You may have to go to your bigger time frames to see some of those higher lows played out, but nonetheless, it still makes higher lows, higher highs. So it's just a matter. The safest trades to actually do is actually to go on your bigger time frames, look for those higher lows, get in, and just wait the traders out. Okay. All right. So last week, this is what happened here. Now, if you notice, last week I was actually in a sell, of course, selling the retracement in order to be able to take a nice buy entry to continue with the buy. Okay. Now, going back to last week, I'll actually pull up last week's sheet just so I can show you what exactly happened. So last week, while I was waiting for that buy, you would have noticed, those of you who have been studying the charts and everything, you would have noticed that where I actually set my initial sell take profit, price did not actually go there. However, what it did was that it created two higher low points on the 1 hour, which would have given me an opportunity to take my profit and also to get into that buy. So if you missed the first one, the second one would have been there for the taking. All right. So let me just pull that sheet up. So last week we started off, let's see, last week we started off by going, just 1 second here. Yes, this is where we started off. So last week, my original take profit would have been at this level right here, which would have been 189.04.10. That's for the sell. Okay. Now, remember, I also said that if you're not comfortable trading the retracement, the easiest thing for you is to wait for that retracement to be finished. Then you actually take the buy and continue with the trend, because we already know the trend on NASDAQ 100 is higher lows, higher highs. So this is what happened. The market opened. I'm expecting price to come here. Price only came right to this line, which was 189.42.2. Okay. Let's say you missed that entry. Price came up, it bought. You're still in profit. Okay. Right back to your entry line. Okay. Price sold again. By this point in time, this is an indicator to tell you that price is not interested to go back down to this low point right here. The market is making higher lows, higher highs. So that is an indication for you to actually know that the buy move is strong, the trend is strong. No use betting against the trend. Take your profit, enter for your buy, and look at what happened. All right. So that's what happened last week. All right. So moving forward, this strengthens the theory that I mentioned to you, that I've been saying over and over and over. No use betting against the trend. NASDAQ 100 is a bullish instrument. Okay. That means you're taking your higher lows to your higher highs so that you can actually continue with the trend move. Any sells on the NASDAQ 100 are only temporary. They're only there so that they can set up the higher low moves on your bigger time frames. Okay. The other concept that I've been always stressing is the zigzag theory. So of course, your zig moves are your buy moves and your zag moves are your sell moves. You will notice when you look at the NASDAQ 100, your zag moves are usually the smaller moves, all right, are usually the smaller moves. So here we have a zig, zag, zig, zag. And then, of course, you have this big zig, then you have another zag, then you have another zig, then you have another zag. Zig, zag. Right now, it's at a zig, okay? So, of course, my next entry is going to be a zag point, all right? So let me just pull up this week's chart real quick so that we can just continue with the analysis for this week. So for this week, what am I looking for? More of the same, okay? We're looking for those higher lows to go to your higher highs. What happened on Friday? Market ended at a zag point. Perfect time to take profits, get out. No use, trying to hold. Yes, you can hold the trade. Of course, if you're holding the trade for, the past month or so, you'd have still been in profit, okay? But you can actually maximize your profit take, or your pip haul by coming out on your higher highs, waiting for your higher lows. This takes practice. You have to be comfortable with the strategy in order for you to actually be able to do it effectively. All right. And you have to know which time frames are actually going to be making those zag points so that you can actually get in to finish your zig points. All right. So this is where the market ended. Perfect place to take your profits. And what am I waiting for this week? Well, like I said, market is making higher lows, higher highs. So naturally, I'm waiting for a higher low in order for me to get in on the trade. Now, there's a video that I have posted on my YouTube, which basically tells you how to identify what the market is going to be making. Is a particular time frame going to be making a higher low, or is it going to be making a new low, or is it going to be making a lower low? Those are things that you need to understand. You need to understand the sequence in order to determine which time frame you're looking for to actually make those points. So one of the things that I want to highlight is that I look at every single time frame. So which means, from my half hour up, I basically look at every single time frame. You'll notice that I have some of my smaller time frames marked here, like my 45-minute all the way down to my 1 minute. Those are basically just there when I'm trying to get precise entries so that I can get into the trades, especially if it has started already. All right. So I'm not using these to do any kind of analysis. These are just there to help me to get into the trades. Now, in terms of analysis, of course, I start from my top down. So I start from my monthly and work my way all the way down to the 1 hour. Okay. Now, as it relates to looking for those points, I am looking for those higher low points so I can go in to continue my my trend move. Now, if we look at last week, this right here, as you know, I like to draw my charts ahead of time. There's also a video that I've posted on my YouTube page, which actually shows you how to actually draw your lines, your support, your resistance lines correctly, and also to use your period separators, where my blue lines are my weekly boundaries and my green lines are my daily boundaries. That actually helps me to actually see what the market is doing in a more precise manner so that I can make a more informed decision. So if we look at last week, this is last week right here. I'm currently on the 2 hour. Now let's go up to, for example, the 4 hour. Okay. So last week, you'll see right here, there's no higher low point that was signaled right here. The first higher low point that came on my 4 hour came on Friday. Okay. Now, if I go down to my 3 hour, similar scenario. Okay. So if I was only waiting on my 3 hour, I would have missed all of this, but I would have gotten in on a trade right here. All right. Short trade, about 1,000, almost 2,000 pips right here for this move. All right. I would have gotten in here. So I've only made 2,000 pips for the week. However, when I look at my 2 hour, okay, here's a chance for an entry. So this is one entry for this day. I would have made about 1,500 pips right here. Let's measure it real quick. So 1,500 pips right here towards the market close. You know, that's a good trade right there. Okay, you're out. Waiting for my next entry. Waiting. This entry came right here at 9 o'clock. Here goes my other entry. Because this is a trend move, I can always hold my buys. I don't need to jump out of my buys. Okay, I can always hold my buys forever because the market is a bullish instrument. So look at what happened. If I held this buy right here, all right, all the way up to here, that's about 7,000 pips. All right. And that's actually 3 days. So that's 1, 2, 3 days. Okay. Gotten out again right here. Wait for another higher low. Here we go. All right. This is the higher low that was made on the 3 hour and the 4 hour. So I'll just mark it real quick so that we can actually see it. So right here. All right. That would have been the higher low on the 3 hour and also on the 4 hour. If you go to your bigger time frame, your 5 hour, you'll notice that no higher low point was created. But because you tracked it on the smaller hour time frames, you would have been able to actually get that. All right. So going back again, what you want to understand is, let's say, for example, and there are always what if scenarios in a perfect trading world. Remember, I said the market is a bullish instrument. So let's say, for example, I got in here at this point for this trade, and it got to the end of the day right here. Okay. So let's measure it real quick. So it got here and it came to the end of the day right here. That's actually 2,500 pips. That's a very good pip haul for the day. And let's say I got out of that trade. I came out and I'm waiting. My strategy is I'm waiting to see that higher low point before I actually take the trade. All right. Some people may have different strategies that will allow them to be able to get into the moves. That's perfectly fine. This is just specific to the AUBER strategy. I use certain indicators to get in for the trades and also certain things that I'm looking for to get out the trade. So let's say I took my profit here. And of course, my next thing is I'm waiting for a higher low in order to get in. I would have missed this move. It's okay. I'd have made profit here. So that's 1,500 pips right here. I'd have made another pip haul here for 2,500 pips. That's 4,000 pips right there in 2 days. That's very good. And I've missed these 2 days. 1, 2, missed those 2 days. However, because I'm waiting for that zag point, guess what? I'm waiting until this higher low is signaled before I get into the trade again. So yes, I'd have missed 2 days worth of buying. However, I'm still getting in on a trend buy because I'm waiting on that higher low. Okay. The trend will always be your friend. All right. So let's look at the reverse scenario. Let's say, of course, well, I started the week looking for those sells. However, I did mention that, of course, the sells, I'm only selling just to get the retracement. So once I see that the stubborn support area, price is not interested in coming back down to this area. Okay, you missed Monday. Guess what? On Tuesday, you see this, take your profits and run. Because remember, your sells are only temporary. Okay, no use trying to hold on to those sells forever. Your sells are only temporary. So you take your profits, get back into the trend move, which are always the buys. So you took a sell right here. Look at what happens when you take a sell and decide to hold it. So price came. You take profit was right here. Price came to this point. You got that, resistance, that support level was strong. Okay. Price bounced back. It tried to go up again. You still have resistance at the top. It's trying to go down. So it pushes down from here. However, it came back to this area again. You still have that support. So notice you are making higher lows. So this low is higher than this low, and this low is higher than the last two lows. That's an indication to tell you that the price is actually continuing. So if you held that sell, guess what? Your account would have been blown. Look at your buys. You came in on this buy right here, okay? And you're expecting it to continue up. It came here, okay? You got that resistance, it came back down. You got support. You're in profit. You came here, you got resistance again, came back down here, you're in, you have that support, but you're still in profit. Look what happens. The third time around, when it comes down here, okay, price just shoots because you're in the trend. So that is one of the reasons why my buys are continually going to be my bias, because NASDAQ 100 is a bullish instrument. So that's what I'm looking for this week. My first trade, no opportunities for me as yet. I'm looking for those higher lows, whether it's going to be on my 2 hour, whether it's going to be on my 3 hour, my 5 hour, my 7 hour. I'm looking for those higher lows before I actually start taking my trades. Now, again, I am not looking on anything lower than my 1 hour to take entries. The reason is there's just a lot of noise when you look at your smaller time frames, like on your half hour. Okay. Yes, there are many opportunities for you to get into the trades right here. Many opportunities. Again, the concept, higher lows, higher highs. So if you get those opportunities, yes, by all means, you can take them because they're trend moves. So if you took a higher low right here, yes, gotten in. Another higher low right here, you'd have gotten it. Okay. So it's about making the strategy your own and understanding the concept. It's a bullish instrument. So by all means, you want to be taking those higher lows, going all the way to your higher highs in order to get those trend moves. So thanks again for watching. That's pretty much it for the analysis for this week. The buys continue. All I'm doing is I'm waiting on my higher lows before I actually take my trades. I cannot buy from a high, okay? I have to wait for the biggest time frame that's actually going to be making that higher low for me to get the proper entry. So I'm not rushing to go into any buys right here. I'm waiting for the market to actually do its correction to make the higher lows. And once I see the time frame that's making that higher low, then I will decide that I go into continue with the buy. Another thing I want to mention, Mondays, Tuesdays, usually there's a fair amount of consolidation before that setup comes for the week. So be careful to watch for it. The other thing that you want to bear in mind is that the monthly candle, you always want to look at how much time is left on your monthly candle. Your monthly candle actually has 12 days left. All right. And you see that the trend has been very strong. All right. So, you know, it's just a matter of sitting down, waiting for those higher low points before you actually go in for your buys. All right. If you zoom all the way out, look at it. The market doesn't lie. Higher lows, higher highs, higher lows, higher highs, all the way up. Okay. Although this is a lower low right here, if you zoom all the way out, you'll see that this lower low right here that it made on the hour time frame is actually higher than another lower low which has been here. So the trend has been consistent. It's just a matter of waiting for your biggest time frame to register that zag point, which is your higher low point, to continue to your higher highs. Also, you want to bear in mind that June 19th is actually a federal holiday here in the United States. So there's going to be a shortened trading session in the US because the stock markets are going to be closed on June 19th. So when you trade, you know, be cautious of that. Make sure you cover your entries. But again, we're looking at a bullish instrument. NASDAQ 100, all the indices have been bullish. So it's just a matter of taking those higher lows to those higher highs. Thanks again for watching, guys. See you next time.